If the stock market rally has been based on the hopes of an economic recovery, then our next guest would tell you that today's sell-off is a harbinger of more pain to come. Peter Schiff is the president of Euro Pacific Capital, also the author of Crash Proof, How to Profit from an Economic Collapse. Peter, welcome back to the program.
Thanks for having me on.
We know that you are a predictor of a correction. How much deeper will this correction be, and will you be putting your money behind that prediction?
Well, remember, we've been in a bear market since 2000. The rallies are the correction. The primary trend is down. Now, the question is the correction over, and are we going back down?
Is it?
Well, there's no way to know for sure. In foresight, we'd have to wait for some time. But certainly, the market has been overextended. The economy is in worse shape today than it was 6 months or a year ago. There's no reason fundamentally for stock price to be rising other than the fact that they fell so precipitously that technically they were due for a bounce.
So, Pete, listen, again, you've had it spot on. We've been through all that. But to me, if the U.S. stock market goes down, it stands to reason that the rest of the world is going to go down. Maybe not in lockstep, but it's going to go down. So the only trade left for you is being short the U.S. dollar to a certain extent and long gold. Does that trade still work? Does whatever happened today scare you a little bit? Does the reversal in the dollar scare you, or is it just an aberration?
No, I didn't think the dollar was even that strong, considering the extent of the sell-off. The dollar didn't have that big a positive reaction, and it's still, dollar index is still trading below 80. I do think that at some point you're going to see that trade totally decouple, and I don't think that weakness in U.S. stocks is going to always be bullish for the dollar. At some point, I think the dollar will start to fall even faster on days when the U.S. stock market is down than when it's up.
So what does that do? Sorry, it's Karen. What would you need to see to become positive on the U.S. market? I take issue with your saying we're in worse shape than we were 6 months ago.
Well, we are.
Well, we're not. I mean, just think about where the banking system is now versus where it was 6 months ago.
No, but think about all the debt that we've accumulated to patch up the banking system. I'm saying that what we've done to save the banks has put us into more harm than had we just let them fail.
So you're saying we were better off if the whole thing completely unwound, which it could have done in February, had we not done anything?
I don't think the whole thing would have completely unwound. I think it would have been very painful, particularly for a lot of people who are getting bonuses that should have been getting pink slips.
Peter, how about house prices, though, that at least have stabilized? We've actually seen the price index actually begin to tick higher. And then, if you actually believe the dollar's going weaker, how about all these commodities that begin to rebuild some of these houses that should still be running higher?
Look, I think commodity prices are going to go up, but I think U.S. home prices are still too high, and they're going to come down. I mean, there's no way around that. But, nothing's going to go down in a straight line. There's always going to be a little bit of a bounce. But I think a year or two from now, prices will be lower than they are today.
What's your trade?
Well, I still think that there is real opportunities abroad. I disagree that if the U.S. market goes down, that foreign stock markets have no option but going down. I think there will be decoupling. I think you can make money in foreign stocks. And I think in addition to dollar weakness, there's a lot of opportunities. And there are a lot of foreign stocks.
Peter, bottom line it for us. Do you think the better trade is to go long a foreign stock market, and if so, which ones? Or would you also short the U.S. stock market?
Well, look, I'm giving investment advice, not trading advice. Maybe that's, you guys are about fast money. I'm about making money over the long term. And for that perspective, I think there's a lot of money to be made by buying foreign stocks and by getting out of the U.S. dollar. From a trading perspective, I don't know. I don't know, what's going to happen in the next, 5 minutes or 5 days. So I can't really say. But I do think that if you're looking to invest money, you don't want to invest it in the United States. And you ask me when I would become bullish. I'm not going to get bullish on the U.S. economy or the U.S. market until we stop making the problems worse and until U.S. stocks reflect a valuation that I think makes sense from a long-term perspective.
Right.
There's no good dividend yields in the U.S. market right now. The PEs are still too high. And that's even assuming that there was a rosy economic scenario in the future. And unfortunately, there's not.
Got it, Peter. It sounds like
to be continued.
Nickname Perma Bear might be appropriate.
I'm not a Perma Bear. Look, I'm more bullish on foreign markets than you guys.
All right. Okay.
Well, how much lower? Just lastly, sorry, Melissa. Lastly, how much lower on the housing market? I mean, you talked about we're not even close. How much lower do we have to drop?
In real terms, because there's going to be a lot of inflation, and so that's going to put a floor under the nominal price. But if you want to look at house prices in relationships to per capita income, relating to an ounce of gold or a barrel of oil, I still think that you can see home prices drop 50% or more from here in those real terms.
All right, Peter, thanks so much for your time. Hope you'll come back to Fast sometime soon.
Well, he's not more bullish on overseas markets than I am, but we're paid to actually make consistent returns. I can't just make a sweeping statement and kind of be in that trade for as long as I hope that trade works.
All that time frame, yeah, okay.